the
I'm
target.
gonna ask you to just pause there. I have the EBITDA margin with me at 16%, Ashwin. This is a tad better than what we were expecting, and this is turning out to be a real mixed bag.
Oh,
Yeah.
then, even the top line and operating performance has been, the top line in line with our expectations and operating performance above our expectations. We need to see what has gone, below that level, then maybe lower than expected other income or higher depreciation due to Gujarat plant coming up, or maybe, something on the tax front. Maybe all these three things we need to look at what exactly has gone wrong within them, so that in order to gauge what has gone wrong at the bottom line.
I'm going to quickly go across to Karanya. Maybe she has more details on whether or not there has been any change in taxation front. Because Karanya, for them to actually match up the top line performance and see a margin expansion at 16%, what went wrong in the numbers then? Why is it that the PAT has come in lower?
Pat, that's what we're also trying to analyze. In fact, we're awaiting the management's commentary also. Hopefully in the con call they will tell us, but it could be a one-off that we're trying to figure, read into the PNL and figure out. Could be because of a one-off, because everything else seems to be in line. In fact, margins which we were expecting to be under pressure, that on that front the company has done extremely better, much better than what we had expected. We thought the Gujarat ramp up and the discount rollout, everything combined together could actually weigh in on the margins, but that has not happened, and PAT decline has been a bit of a surprise really, and it will be very critical to see what the management has to say as far as the explanation for below than expected PAT number is concerned.
Management is saying that cost reduction efforts is the reason for the margin improvement. That is a point taken. But Karuna, I believe they've mentioned something about a new change in, I think, royalty calculation, if I'm not getting, if I'm getting that right.
That is exactly, that is what I was also reading into just now as we, as I was mic'd up. But give me a moment to come back to you, because I'm still reading the numbers, and I'd be able to probably give you more updates in a minute's time.
Yeah, okay. See, uncertainty on forex commodity prices, that's the comment coming in from Maruti. So, extremely cautious is what they're sounding like. They're saying there's been a negative impact of mark-to-market invested surplus. I don't know what they're pertaining to. Ashwin, perhaps you would have a better hang of this. They're saying there's been a negative impact of mark-to-market surplus.
Maybe like, I think the royalty, as they have said, and also some raw material buying from in terms of yen, that may be happening, the adverse movement maybe in currency terms. So I think that we need to gain more clarity from the management itself to make any concrete comment on it.
Yeah, okay. But Ashwin, just going by what the performance has been and the fact that they're sounding a little cautious in their commentary, they have approved a revision in calculation of royalty. They're saying that they're extremely cautious about the way RMC costs as well are going to pan out for them, and the forex movement as well. Would you say that the market has already begun pricing that in? Because from that life high of 10,000, the stock has already corrected about $800 from the top.
Oh yes, I mean, we are all aware that the RM prices have shot up in this quarter, and the impact of that will be felt in this quarter as well as the coming up quarters. So that is one thing. Then again, on the currency front also, rupee has been slightly weak this quarter as compared to yen, and overall, the festive season also was not that great as expected. So overall, the weakness in the expected weakness in the overall financials is getting factored in, and hence the stock has also gone down to that level.
Okay, they're saying that new models starting with Ignis will have lower royalty payments. So that's the word coming in from Maruti. Do we have Karunya back with us? And Ashwin, Karunya is there. Karunya, have you been able to decipher what managed to stay afloat when it comes to margin performance for Maruti?
Well, as far as margins is concerned, we've already highlighted the fact that even the management believes that cost reduction efforts is something that has helped them over time to improve their margins, because 14.8 is what the street was estimating, but it came in as a surprise on the positive side at 15.8%. But talking about the profitability, well, the bit about royalty that we were talking about, that's something they will actually implement going forward. Maruti's board has already approved this new method of calculation for royalty payments, and Suzuki's board is still to approve it. So that is aside, because that is not any factor which has actually impacted the numbers this time around. But talking about the profitability, the company has highlighted three big reasons which have actually acted as a headwind for the company in the third quarter. Firstly, there's been a higher sales promotion expense. We all know that Maruti has not actually doled out too much discounting, but yes, on the sales and promotion side, looks like their expenses have gone up more than expected, and the commodity prices is clearly something that has weighed in on the company's profitability. While the margins, they have been able to expand from the levels on a year-on-year basis, but profitability clearly has not really been able to come at par with the rest of the numbers, the rest of the headline numbers. And market-to-market impact on invested surplus is something that they've highlighted as a factor which has probably weighed in on their profits this time around.